I'm going to be discussing Zip Cyan lowest in this video, and it's basically a normal view, but and the vertical yellow line right here in the middle is probably what you like to see as much as possible from a normal perspective. I've got a few other vertical lines that I'm going to show you. But what I want you to, when you think of the Zip Cyan, if you've had a chance to look at the indicator definitions in the documents file, you can print off a lot of different things there to review and get familiar with the system if you go there to the documents file. But anyway, in the indicator definitions, it tells you that Zip Green tracks new trades in and out of the market, and Zip Cyan is a companion trade. I call it a long-term trade tracker. It gives us a little bit longer term view of what's happening with trades, and so these two are companions. They work together, and you'll see what I mean here as we get into the video. On the yellow vertical line, it's the day before the Zip Cyan becomes lowest. Now this one here happens to be lowest above 50. That you can have them occur below 50 as well, and it just depends on what's happening. These are always usually a little stronger, or at least can be sometimes, because because other things are happening around it. But the first day you're going to see the yellow line, I moved over one notch because this is the first day you're going to see the Zip Cyan as the lowest. And the rules of Zip Cyan are, if it's lowest, it increases, the price increases. If Zip Cyan is the highest, it decreases. But a contributing factor to your success in finding volatile candles, or in other words, candles that are going to be bigger than other candles, is that when Zip Cyan is lowest, you also want to be in an uptrend. And there are exceptions to that, which I'll show you a couple of them here. But just to identify this down in the power chart, because I've just got the power chart and the Zip chart in this example. Down in the power chart, the power green is above the orange, and we're climbing into an uptrend, or continuing in an uptrend. And so, and you can see the candle on the right side of the vertical yellow line is a real nice green candle. And in fact, I'm in Netflix right now. This is October of 2015, and this candle here had a low of 101 and a high of 106. The next candle on the next day had a low of 105.76 and a high of 112. So you can see, depending on, going back to this first day that the Zip Cyan became available, you could set your scanner alert to pick up these 10 seconds after the market opens, because you could then trade or buy into this green candle and capture the value that occurs today and the value that occurs tomorrow. So depending on when you get in, this one on this opening day, it opened at 103 and it went down to 101. So it went down 101.45. So it went down about $1.50. So yeah, there could have been 5 or 10 minutes before it started climbing back up out of there, which would be more than ample time to get your scan results and pick your investment for the day. So it's just amazing how the zip Cyan consistently works. I'm going to show you this over here. We're going to move over to the red vertical line. This is the first day that there is no on this day there is no high zip Cyan. But you move the red line to the right one, and on this day we have zip Cyan as the lowest. I said that wrong earlier, forgive me. Zip Cyan is now the lowest, and in theory it's going up. We do have an issue in that we are in a downtrend, and I've indicated to you earlier that you want to be in an uptrend. But one of the key things that you can look for here is you always want when zip Cyan is lowest, you always want zip green higher. And when it's higher, then you can trade that position going up until you find a signal that tells you it's going down. And so you can actually, this one here gaps significantly the next day. So oftentimes when you've got a good trend going on, and by that I mean when I identify with a good trend, if you back up here just 2 days, go to this large green candle, you have a pink green bottom. Let me show this to you. This is let me expand this a little bit. You've got a pink green bottom right here on the red vertical line that that you know is going to go up at some point. You also have an island, they call it an island when the candle gaps way down, and oftentimes what it does is it gaps way up the next day, which this one did. But in any case, because you had this this pink green bottom, which is basically telling you the zip green, when it's at 0 for 2 days, it's telling you that a lot of people are leaving the market. When zip green is at 100, then a lot of people are coming back into the market. But so now what I'm trying to explain here is that when you get over here 2 days later, you can look back and see that zip green was at 0, and so you're in an uptrend going up, which hopefully will continue. And so when you have something like that, I'm apt to hang on that overnight and see if I can capture any gaps. Doesn't always happen, but sometimes it can really be good. And it's especially backed up with the power chart red line. When the power red crosses 0, you are going into an uptrend. So there's not much chance that it would go back down, but let me verify. The power red is at minus 0.03, so it actually hasn't crossed yet. So that may be part of the reason for the gap. If you haven't, if you want to understand more about the power red line, you can see that in the red peak exception video that I have, because I created a chart with the 3 red line only on a zip, a power, and a trend chart, and it graphically shows how the power red is the most effective position cycle indicator that is on the system. So take note of that if you haven't seen it. It's very effective. Going on to the gray vertical line here, I'm going to move this out. This is the first day that the gray vertical line is low. That at the gray vertical line that the zip Cyan line is lowest. And normally, what we know, we like to see the zip Cyan line go up when it's the lowest, not go down. But the basic rule is that the zip green be above the zip Cyan when zip Cyan is lowest, and vice versa the other way. We like to see the green line under when zip Cyan is highest. Just like right over in here, zip Cyan is highest, the candles are going down, and zip green is well under that. And so in this case here, you went into about a 4 or 5 day pink green bottom, which again is a reversal pattern. Eventually it's going to go up. But in this case right here, the next day we got a zip Cyan lowest. We know the rules of zip Cyan lowest means that it's a reversal, it's going to go up. And if we look at the candle the next day, it's a nice green candle. However, we've got a divergent situation in that zip Cyan went down instead of up, like it normally does when it's lowest. And when I move this candle over, we now have zip green at 100 and zip Cyan at 37. So even in this move here, you could in theory take it. At this point, I might not take it because I've got a peak on my power yellow, and it could go down if it was a bottom. If the line was going down today instead of up, then I might say, well, it's not going down. But especially since the yellow and the white are separated by the power orange and green, those two want to come back together, and it could be that they're coming back together pretty soon. But even if you, let me just look at the candles once. Even if you did trade this, you stayed in this trade and you went to the next day, you can see that you get a red candle, but you can also see how high this next day went, because this one opened up at 125.26 and it had a high of 126.75, which is $1.50. So it went up the $1.50, and obviously at this point you can keep in mind it. Let me point these out to you again. This one closed at 125.36. This one on the red candle where the gray vertical line is right now, that opened at 125.26. So it opened 10% down. So all of your lines are going down. And by all of your lines, I mean your zip yellow and blue went down, your zip pink, red, and gray went down, and your green zip stayed at 100. Now that is a classic a pink green peak signal that you're going into a downtrend. And so 10 seconds after the market opens, you know you're in a downtrend. You're going into a downtrend because all 5 of these lines have gone down to some degree. You don't know where they're going to finish at the end of the day, but they've gone down to some degree. And it's kind of strange how it works, but it's very unlikely that these lines actually went up, even though this went up $1.50, because it originally opened lower than the previous close. Analyze those ideas in your activities as a trader, but you'll see that the way these indicator lines move, that usually will happen. All right. So that describes how you can effectively trade the Zip Cyan lowest. I've got one other one that I want to go to over here, and this is right over here is the red vertical line is the first day of Zip Cyan lowest, which we know should be going up. But I want to point out here that we are in a downtrend. And I'm going, and you're going, whoa, you're not going to trade this, are you? And it's back to the same principle that I was dealing with in one of those other previous lines. The day before we have the alert of the Zip Cyan lowest, we have the Zip green at 0 for, looks like 4 or 5 days. And so now Zip green is above Zip Cyan, which is a basic requirement, and so there's a really good chance that even though we're in a downtrend, it's going to go higher. And remember when I talked about the power chart orange and green lines, if they are above 0, they don't have the power that they have when they're below 0. And so that's a different way of describing it, but basically what I'm trying to tell you is that pullbacks can gain or have more effectiveness when the orange and green power lines are above 0 versus under 0. And so basically you have the next day here, it opens at 119, it has a high of 123, and the following day the high to the low is 122 to 126. So a couple of really good days to be trading. Obviously you need to find the top. As you're looking at this while you're trading it during the day, bingo, what do you have? You have a red green peak, which is a downtrend reversal pattern and in the zip chart. And so again, you're going to watch the top on that and try to exit your long position. And in fact, because you're at a red green peak and you're in a downtrend, it's a great opportunity to go short. So that's the ideas behind the Zip Cyan